In this lesson, we're going to look at the next strategy, which is the advanced breakout, or we're also going to call it the ABO, same thing as the advanced breakout. So at this point, we already know what the initial breakout is, or the IBO. We already know what the CBO is, or the complete breakout, which is one of the safest strategies, right? Let's come back to those a little bit. The IBO is the initial break of the 1 hour 50 EMA, right? So it's still at the beginning of that run on a higher time frame, right? It's the beginning of the trend on a lower time frame, the initial break of the 1 hour 50. The CBO, same kind of idea, right? However, it typically occurs a tiny bit later than the IBO, still at the beginning of the higher time frame run or pullback, right? And still at the beginning of a lower time frame trend, right? But it's the initial break of the 4 hour 50 EMA instead of the 1 hour 50 EMA, right? So because it's the initial break of the 4 hour 50, there's a little bit more development with a CBO. With that said, the advanced breakout, the ABO, a little bit different. It happens before those two, right? So that's why it's a little bit more advanced. It's a little bit more aggressive because you're literally catching the beginning, literally the beginning of the higher time frame run or pullback and the very beginning of a lower time frame trend, right? Since it's an advanced breakout, we're literally taking the breakout on a lower time frame, which is the wave one run when it comes to the Elliott wave theory. The wave one breakout, which is the initial breakout that forms the trend, right? Versus an IBO, that breakout already exists. With an IBO, you have a wave one breakout, you wait for a wave two pullback, and you're typically catching the wave three run, right? With a CBO, it's typically the same idea. It's either that you're catching a wave three run or maybe a wave five run, right? With an ABO, you're always catching the wave one run, so it's the initial breakout, right? So that's why the ABO, the advanced breakout, is so much more complex, a little bit more aggressive than an IBO and a CBO, simply because it happens so early into the run. With that said, there's a reason why an ABO is a really good strategy, and there's a lot of really good confluence factors that we're going to look for in order to identify really good ABO setups to minimize that risk, because the reward on ABO setups is typically really, really good. At minimum, we're always targeting a 2-to-1 reward risk ratio, typically looking for around 3-to-1, but sometimes even larger than that, right? So there's a lot of benefits to an ABO. However, it does carry a little bit more risk than the other ones. But again, we're targeting more a higher reward risk ratio than typically with an IBO or a CBO, a minimum of 2-to-1, right? Hence why it's a pretty cool setup. So with that said, I'm not going to go into any more detail when it comes to this introduction. I want to show you on the charts what an ABO actually looks like, break down the various characteristics of an ABO and so on. Let's have a look. So just like with the previous two strategies, the IBO and the CBO, the ABO, the advanced breakout, also has some very specific characteristics. One of them is, again, characteristic number one, major support and resistance on the higher time frames that we're again rejecting. That is the criteria number one, is that we have some kind of major support and resistance on the higher time frames, right? That's the same criteria with an IBO, same criteria with a CBO. It is the same criteria with an ABO, major support and resistance. Criteria number two is that we typically need some kind of deceleration on the higher time frames at that major support and resistance level. We're not always going to have a reversal candlestick formation. That's what's a little bit different between an ABO, an IBO, and a CBO. Because with an IBO and a CBO, we're typically waiting for that reversal candlestick formation to develop. That's criteria number two. For an ABO, criteria number two is that we don't need that reversal candlestick formation. If we have it, that's great. But what we do need is deceleration at that support and resistance level, right? Criteria number three is that on the lower time frame, such as the 1 hour chart, we have some kind of a price action pattern and that the trend on that 1 hour chart has finished, right? So if we look at the wave theory as an example, that means wave 5 has concluded and formed some kind of a price action pattern, such as a descending triangle, an ascending triangle, a wedge, right? A double bottom, some kind of price action pattern that is telling us that, hey, a trend is coming to an end and a new trend is potentially beginning, right? A run on a higher time frame is a trend on a lower time frame. Same principle applies here. So if we believe that on a higher time frame, price action is slowing down and stalling, and a new pullback or a new run is beginning, that means that on a lower time frame, such as on the 1 hour chart, the trend should be concluding, right? Wave 5 run should be finishing, decelerating within some kind of a price action pattern, and then a new trend should be beginning, right? So same idea when it comes to multi-time frame analysis. We're still using multi-time frame analysis here. So wave 1, major support on a higher time frame. Or sorry, criterion 1, major support on a higher time frame. Criteria 2 is that we have deceleration on a higher time frame at that support and resistance level. Criteria 3 is that the trend on a 1 hour chart is coming to an end and is forming some kind of a price action pattern, descending triangle, and so on. Criteria 4 is that we have at least 2-to-1 reward to risk ratio on the 4 hour time frame, right? Up to the 4 hour 50 EMA. The main target is the 4 hour 50 EMA on ABO setups. So we're looking for at least a 2-to-1 reward to risk ratio up to the 4 hour 50. That is criteria number 4. Criteria number 5 is that on both time frames, the 1 hour chart and the 4 hour chart, we need some form of a reversal candlestick formation, such as a bullish engulfing, breaking out of a wedge, low test, tweezer bottom, and so on. And then the last criteria, I believe this would be criteria 5 or 6 at this point, volume on the 5-minute chart, right? We need an increase in volume when that breakout is happening. So that's the characteristics of an ABO setup of an advanced breakout. That said, let's have a look at the charts, and I'm going to go through every single one of them. Starting off here on the higher time frames. So the first thing that we're always going to look at is the daily chart, right? Do we have some kind of major support and resistance on a daily time frame, right? That's characteristic number 1. And in this case, we do, right? 82.0 level is acting as major support, right? So the trade has been occurring right here, okay? So you see how it was right at the beginning of this candlestick formation? Let me make this larger, right? So we're right at the beginning of this tweezer bottom that was developing, right? We cut the trade, the ABO happens right here, right at the beginning, right? Before the candlestick formation actually develops fully, typically, right? So that's why we need some kind of a major support and resistance level. And I'm talking major, not minor. We don't want these support and resistance levels to be broken all the time. We want to make sure that they're being rejected. So, such as these extreme lows, that is really good. If we have extreme highs and we're looking to go short, that is also really good, such as this level right there, right? That's extreme highs. So we're looking for these major support and resistance levels. In this case, we have this major support right here, which has, well, 1, 2, 3, 4. These are kind of a rough rejections here, but number 5, number 6, and we have more over here of number 7, number 8, 9, and so on. So we have quite a few rejections off of that horizontal support and resistance level, which is good. That is exactly what we're looking for. We're looking for major support and resistance levels that have, quite good rejections, at least 3, right? But we're looking for a good, really strong support and resistance level. So that's characteristic number 1. Number 2 is we want to make sure that we're actually slowing down and decelerating at that level. So a lot of times when we're playing pullbacks, this is again a pullback possibility. ABOs can also happen with the run, right? So if this eventually pulls back, we can also look to take it with the run, okay? With the trend, I mean. So ABOs can happen as a pullback or as a run, doesn't really matter. But as pullbacks, we want to make sure that, again, the run on a daily time frame has been dropping for quite some time, because we want to make sure that the Elliott wave theory on a lower time frame has concluded. wave 1, wave 2, wave 3, wave 4, wave 5. We want to make sure that on a lower time frame that has finished, that trend has finished, because that means that the daily run has also concluded, right? And a pullback is coming and so on. And we're catching that pullback. So we want to make sure that characteristic number 2 is that we actually have deceleration and that we believe that that run or that pullback has come to an end, right? So in this case, we had a little low test right before the entry happened. So we're accelerating, and then we started to slow down here and developed a low test reversal, rejecting that support. Perfect, right? So that's the higher time frames. That's pretty much it, right? Major support and resistance level, some kind of a deceleration at that support and level. Support and resistance level. At the same time, we can look at the higher time frames, such as the weekly and the monthly, to see what is happening. Is the bias in our favor? Is it against us? So in this case, we look at the monthly chart, it's clearly against us, right? We had this breakdown, this pullback to roughly this monthly 50 EMA, and a strong acceleration to the downside, right? So we don't want to push this too far to the upside, because we are accelerating to the downside on the higher time frames. On a weekly chart, same thing. You can see that we started this bullish trend, but then we peaked at the highs and then broke down from the lower low. Previous lows, lower low, right? So it's a break to the downside. It's kind of like a CBO setup if it pulls back, right? This would be a CBO on a higher time frames. Break and retest of the weekly 50, daily 50, right at the beginning of a monthly run. So the weekly chart is also in a bearish trend. Potentially could have a pullback, but it's in a bearish trend. So we're trading against that higher time frame momentum, hence why this is again a quick in and out opportunity. It's a pullback play. Higher time frames are not really on our side, right? So we always want to have that and make that higher time frame bias, right? So that's what the higher time frames are telling us. Those two characteristics are met. Brings us to characteristic number 3, and that's on the lower time frames, the 1 hour chart. Do we have some kind of a price action pattern, and do we believe that the lower time frame trend has actually come to an end, right? So price action pattern, it's there, but if we zoom out, we've been trending downwards for quite some time here on this 1 hour chart. Same thing on the 4 hour time frame, right? You zoom out on a 4 hour chart, and we have been in this big kind of bearish trend for quite some time, right? So at this point we can say that, yeah, okay, it looks like the trend has came to an end, right? Potentially. It's still hard to say because the Elliott wave theory is not really that visible within this lower time frame trend. But I mean, it has fallen so far. We're not catching this right at the beginning of the trend or anything like that. It has fallen quite a bit. And that's what we want to make sure is that, it dropped quite a bit. The trend, we believe, is coming to an end or potentially will come to an end soon, right? Whether the Elliott wave theory is present or not, we still want to make sure that we believe that that trend is coming to an end. And then this is where that price action pattern comes in. So on the 1 hour chart, we're looking for some kind of a triangle pattern or some kind of deceleration. In this case, we have this double bottom, this descending triangle, and we're looking to take the breakout to the upside, right? So criteria number 3 is met. At the same time, we also develop bullish MACD divergence, which is kind of like an extra bonus. It tells us that at some point, this trend will come to an end, and that's right now, right? So criteria number 3 is met. That is deceleration within the actual trend, looking for some kind of a price action pattern, making sure that that lower time frame trend is coming to an end, right? And we have that. Then criteria number 4 is, can we get a good reward risk ratio up to the 4 hour 50? Because we want to make sure that we're looking for at least a 2-to-1 position. So the 4 hour 50 EMA, just like with an IBO, is the safest target, right, for an advanced breakout. So we want to make sure that even if we're pushing it farther, right, than the 4 hour 50 EMA, sometimes if we're catching the run, we will be pushing it farther than the 4 hour 50 EMA. But as a rule, we want to at least lock in around 2% before we hit that 4 hour 50 EMA, right? So in this case, this position sizing was roughly 3%, 2.5, 2.78, up to the 4 hour 50 EMA. So that criteria is met. And then number 5, right, we want to make sure that we have some kind of a candlestick formation on a lower time frame that is telling us that we have that breakout, right? So if we look at the 1 hour chart, right, We have this pattern. We want to make sure that we're being squeezed out of this pattern and forming some kind of momentum, some kind of candlestick formation that is telling us that we're breaking out right now, right? That we're actually rejecting this level and we're going higher. So in this case, we had this bullish engulfing, rejecting that higher time frame support that we had witnessed and breaking out of this triangle pattern. So criteria number 5, bullish engulfing, we have that. At the same time, we need something like that on the 4-hour chart. We always want to make sure that that 4-hour chart is on our side. Whether it's an IBO or a CBO, we want to make sure that that 4-hour price action, candlestick formation, momentum, all three, that it's on our side. So with that said, the 4-hour chart, if we look closely here, it's been decelerating, right, at that support. And at the time of the entry, we were developing a beautiful low test, rejecting all those lows, right? That support level on a daily chart, the double bottom on a 1-hour chart, and so on. So we have the momentum, we have the low test on a 4-hour chart, and we have the bullish engulfing on the 1-hour time frame. And the last characteristic is that we have volume, okay? When we're taking ABOs, because it is this breakout play, we want to make sure that we have as many confluence factors as we can, because it is kind of catching the bottom. In trading terminology, it's also called catching a falling knife, right? Because we're literally, the price action is moving downwards and we're taking it against the momentum. So we want to make sure that that momentum dies off, hence why we look for major support and resistance on a higher time frame, deceleration on a higher time frame, making sure that on a lower time frame that trend is coming to an end, that we're decelerating within some kind of a price action pattern on the 1-hour chart, right? That's the first 3 characteristics. That we have momentum and candlestick formation that's actually telling us that those levels are being rejected and that we have a breakout out of that price action pattern. Bullish engulfing on a 1-hour chart, low test on a 4-hour chart, right? Criteria met. So we're just stacking those confluence factors that tell us that that specific level on a higher time frame is being rejected, right? And the last one is volume, right? So at the beginning of the day, you can typically see that the volume is quite low compared to when the London session opens up or when the New York session opens up, right? So we typically want to enter these advanced breakouts, these ABOs, right? The entry is still on a 5-minute break. Live entry, no entry orders on this. We can't set any entry orders on ABOs. ABOs are only live entries. Again, we want to make sure we have all the confirmation that we need, hence why they're only live entries on these 5-minute 50 EMA breaks, right? So we want to make sure that when that 5-minute 50 EMA break is happening, that is developing that bullish engulfing on the 1-hour chart, that low test on a 4-hour chart or whatnot, that candlestick formation, that we actually have volume, that we have a spike in volume, because that means that, okay, momentum's coming in, people are buying or people are selling, and we're playing with that momentum, we're trading with that momentum. That is the last characteristic, right? So that is what an ABO looks like. Those are all the characteristics of an ABO. And if you have every single one of them, you can see how we're just stacking up confluence factors, making sure that we're actually taking good trades here, right? With ABOs, we cannot be taking weak setups. They need to have all of those criteria to actually be good, because we need to make sure that that momentum on the higher time frame and on the lower time frame is actually dead, finished, right? Because we're going to be trading against it. We're catching again. This is the wave 1 breakout, right? So we're literally catching the beginning of something big, the beginning of a pullback and whatnot. So when it comes to the entry, stop loss, target, and so on, I'm going to dig into that in the next lesson, but briefly here, right? We're always going to be entering on that 5-minute breakout when we have the volume that is developing that breakout on a 1-hour chart, that bullish engulfing on a 1-hour chart, the momentum, right? And then we want to make sure that the stop loss is nicely below all lows, right? So in this case, if we kind of follow the cursor here on a 4-hour chart, this is where the stop loss is, nicely below all the lows, right? Same thing on a 1-hour chart, nicely below all the lows, right? So we just want to make sure that our stop is protected. and then targeting the 4-hour 50 MA, slightly below or slightly above the 4-hour 50. In this case, you can see that when we zoom out, the 4-hour 50 is actually acting as a very good dynamic support and resistance level. So it doesn't really make sense to push this any farther, even though the daily chart has developed this beautiful tweezer bottom, right? At the time of the entry, we could potentially push it farther. But I mean, this 4-hour 50 MA is acting as such a good dynamic resistance level that it doesn't really make sense to push it farther. Hence why I can already lock in about 3% targeting that 4-hour 50 MA, which is ridiculously good. That is what makes these ABOs good setups in general. When you have all those criteria met, you still get a really good reward risk ratio. It's not just a 1-to-1, right? It's a minimum of 2-to-1 reward risk ratio. So the position sizing can typically look something like that. Nicely protected stop, targeting the 4-hour 50 MA on a 5-minute break with momentum. So that is it for the advanced breakout strategy. As you guys see, it's pretty complex, but I would say when you fully understand it, it's pretty simple, right? You just gotta wait for all those criteria to be met: major support on a higher time frame, deceleration on a higher time frame at that support and resistance level, right? At the same time, on a lower time frame, we want to make sure that trend is coming to an end. That wave 5, if we're looking at the Elliott wave theory, the wave 5 is coming to an end, or that trend is coming to an end. And we're having some kind of a price action pattern developing on that 1-hour chart that is actually telling us that momentum is dying off, that the trend is finishing. And if we break that pattern in the opposite direction, that is the breakout. We're starting a new trend. Right, so we're looking for that deceleration on all time frames, on multi-time frame analysis here, right? And then we look for the momentum, that candlestick formation on both the 1-hour chart and the 4-hour chart that tells us that, yeah, that level is being rejected and we're now breaking out, right? And the last thing is obviously the volume. Making sure, again, that's the last step, that we're entering when there's volume in the market, when people are buying or selling, and we have that spike in volume. Right? If we have all those criteria met, that is what makes a really good advanced breakout or an ABO. The thing with ABOs, I want to say right now before we conclude, is patience. Patience is extremely important. You want to make sure that you have really good levels, really clean price action, really clean deceleration and candlestick formation, really clean momentum, right? You just want to wait for really clean, in general, setups that meet all the criteria, because an advanced breakout is literally, it is the most advanced and the most aggressive strategy out of all of them that we teach here, right? And out of all of them that we will be trading. However, it is a really, really good strategy when you follow the guidelines and you are patient with it. Patience is extremely important when trading advanced breakouts, and that is what I want to leave you with right here, and that's patience. So that is it for the advanced breakout lesson. And in the next one, I'm going to focus a little bit more on the actual execution of advanced breakouts and dig more into stop losses, targets, and entry levels, and so on. So with that said, that is it for this advanced breakout lesson for this strategy, and I'll see you in the next one. Take care.